Thomas, good to see you. I want to talk through the markets and geopolitics. Rising tensions in Iran have pushed oil prices higher and created short-term volatility in the markets, as we all know. Historically, however, geopolitical conflicts tend to have only a temporary impact on stocks. Let's take a look at the S&P's one-day performance as we record this on April 20th. We do see some red, some green on the board. Why do we tend to see stocks fall first when tensions rise?
Ultimately, investors, they hate uncertainty.
Yeah.
And whenever there's uncertain times, you're going to see a lot of sales happen in the background. And it's going to be a lot of red.
So we take a look at the S&P's historical performance when it comes to geopolitical events. And as we can see here, several events and mostly short, shallow pullbacks. Can you explain what we're looking at, please?
Yeah, if you look at the lower right-hand quadrant of this graph, you're going to notice that there's a concentration of dots there, signifying that you don't really see more than 10% correction in these types of events, and they last less than 100 days. That's going to be on the y-axis.
So for investors watching these headlines and rising oil prices, what's the most important perspective we should keep in mind before making any portfolio decisions?
I think, first of all, you should have, some sort of plan in place already and be thinking long term. Like I said, these things come and go. We've seen them over time. They only last for a short period of time. So keep a long term perspective.
Right. Make decisions based on data, not on how we feel in the moment. That brings me to our last question. Can you just talk through how emotional investing tends to lead to bad financial decisions?
Yeah, sometimes what happens, if you notice, just a couple different points on this graph here where you have euphoria and then you have despondency. Typically, what people do, they may buy when it's high, and then they may sell when it's high or sell when it's low and buy when it's high. And that's typically what you don't want to do. You want to do the opposite. So maintaining your emotions throughout the curves is ideal for any investor.
Right. And again, it all comes back to having that financial plan. So we're not making decisions based on how we feel in the moment. Thomas, if somebody would like to create that plan with you, how can they get a hold of you?
Yes, definitely go to my website, Martin Heritage Group, LLC.com. You can reach out to me directly, 651-503-6064. You can also shoot me an email at info@martinheritagegroup.llc.com. And then I'm on all social media platforms.
Great. Thomas, thank you.
Thank you.